August live cattle gapped higher into a new contract high after a few weeks of consolidation. Now, very quickly, that August live cattle contract is at 70% on the relative strength index, which is entering into an overbought condition, but not yet an extreme overbought condition. And in this longer term bull market that we have been in, we have gotten into some higher levels on the relative strength index. So not necessarily suggesting that the top is quite here yet, or that a correction is pending. Just kind of important to note that we are venturing into overbought territory, but not yet at an extreme case, especially for the cattle market in particular. It's been quite a ride. In the meantime, cash cattle trading sharply higher than last week, with reports of $5 to $8 higher than last week. This would represent new all-time record highs for cash cattle trade. And that is one of the drivers of the higher futures market that we see. In the meantime, box beef prices are higher as well and into record territory, but they've not been up nearly as much as what cash cattle have, and packers' margins are under pressure and in the red. So at some point, the packers might back off on cash cattle, but that certainly has not been the case here this week, as evidenced by the sharply higher cash cattle trade. Weekly export sales were down from last week at 900,000 metric tons. That's down 39% from last week and down 27% from the 4-week average. With the higher prices that we have in beef right now, we might be seeing global end users back off a little bit, but the domestic consumer has not. And the cattle market, for the most part, is a domestic U.S. market. Most of our demand for U.S. beef comes from the U.S. So until the domestic end user backs off or starts spending less at these higher prices, it says that demand is still there, even if the global end users do back off just a little bit. So lots to be paying attention to here in the live cattle market. So everybody stay tuned and you stay safe.